definitions of three types of instruments what we are going to use it. Number one is financial asset, number two is financial liability, and third one is equity instrument. Meanings we have understood. Now let us go and dig one on one. Now let us go analysis of financial asset. Financial asset, let us go. Now financial assets. Analysis of financial asset. Yeah. So sir, what you are going to financial asset? Array. If it is a financial asset, means I have to pass the journal entries or not?
Yes.
Correct. So for that, my dear friends, first thing what you have to do is, my dear friends, first is basis for classification of financial asset. Basis for what?
Classification of financial asset.
Yeah. Basis criteria for classification of financial asset. Next, number two, you required so measurement basis for financial asset. Measurement basis for financial asset. This is basis. Yeah. Third one is classification of financial asset. Then fourth one is measurement of financial asset. Recognition and measurement. Write it as recognition and what? Recognition and measurement of financial asset. Yeah. Yeah. Recognition and measurement of financial asset. Got it? So these are the four things we are going to study in a sequence basis. Now, so first one, for the purpose of classification, that is, if I'm going to classify the financial asset, means for that criteria should be there or not. On what criteria you are going to classify? Correct? First one is what? On what criteria, on the basis of what criteria you are going to classify the financial asset. That is the first discussion. Second one, if you are classifying the financial asset, means how you are going to measure. For that, how many measurement bases are there? That we have to discuss. Third one, so how many types of, what are the types of financial assets are there, that we have to. Then for that financial assets, what we have classified, for that based on the criteria for classification and measurement base, we have to go for how initial recognition has to be done. Got it? Yeah. Now, my dear friends, first let us go for basis for classification. Basis, that is criteria for classification. Basis or criteria for what? Criteria for classification. Yeah. Now, so here, my dear friends, so criteria are, my dear friends, here we have the we have to classify based on two criteria. We have to classify based on two criteria. First criteria is, my dear friends, business model. Business model. First criteria is what? Business model. Second criteria is contractual cash flow. Contractual cash flow test. Now, sir, what is a business? What is a business model? Correct? So both business model means, my dear friends, it is a intention. That means how long you are going to hold this financial asset. Are you understanding?
Yes, sir.
Yeah. How long you are going to, whether it's a long term, short term, etc. will come or not.
Yes, sir.
Yeah. So based on that, we are going to business model means it is a intention. Intention means it is what? For selection. It is for selection or managing financial asset, and a contractual cash flow. Contractual cash flow means, my dear friends, it is a cash flows. It is nothing but what? Cash
Cash
flows.
flow.
Now, what is business model? What is contractual cash flow? Doubt will come or no? Yeah.
Yes, yes.
Now, business model. Business model. Business model. So, business model means what? It's an intention. Na?
Yes, sir.
Intention, correct? Yeah. So now, so please concentrate and give me the category. Give me the category. So as per AS13 in IPCC, you would have come across the types of investments. Yeah. Long-term investment, short-term investment, yes or no?
Yes, sir.
Yeah. So same thing, my dear friends. This is, look out, as per AS13. Let me 1 minute, I will deviate the concept and I will come back. So in AS13, you would have come across, it is a two types of investment. One is long-term, short-term, correct?
Yes, sir.
Yeah. Same thing. This is IPCC Group 1. Group 1 you did. In investments chapter, you would have did. Then in a
Yes, sir.
group 2, advance accounts was there. Advance accounts, correct? In that one chapter called banking was there. Correct? Banking financial statement. In
Yes.
that, first to start with, prudential norms was there. So in that, we will classify the investments based on that is for the purpose of valuation, for the purpose of recognition of income, etc. Got it? Yeah. So based on for valuation, for the purpose of recognition of income, we are going to value the assets based on few cases. Have you come across my different financial instruments? Array, financial hello, are you there?
Yes.
Yeah. So for the purpose of valuation, look out, for the purpose of recognition of income. So whatever our loans assets are there, that we will classify as loans. Whatever we have given in case of banking, for them it is an asset. That we will classify as a performing asset, non-performing asset. Correct?
Yes, sir.
So on performing asset, income has to be recognized on accrual basis. On NPA, it has to be recognized on receipt basis. Correct?
Yes, sir.
Yeah.
Makes
So
sense.
that is for the purpose of valuation of assets, for the purpose of income recognition. Now, for the purpose of valuation of asset, valuation of investments, so in AS13 will not apply in case of banking financial statements. Valuation of investments, AS13 will not apply. Will not apply. Are you understanding? Yeah. Here,
Yes.
that investments are valued at three categories. Have you come across held to maturity?
Yes.
Held
Held for
for
trading.
trading, available for sale. Correct?
Yes, sir.
Yeah, it is nothing but held for maturity. That means in AS language, it is a long term. Got it?
Yes.
Yeah. So held for maturity. So now held for trading. Held for trading means it is a short
Short
term.
up.
Correct? Available for sale. No info or no idea. Shall I write? No idea. So that means in a banking language, I can say, yeah. So that means for the purpose of SLR, statutory liquidity ratios are there. CRR,
Yes,
SLR,
sir.
correct? To maintain the short-term investments, suppose if the bank, so today it's a 20% is a statutory liquidator, for example. Now currently it's 18%, let it be. Now example, let us take 20%. To maintain 20%, the company has made a short-term investments, just imagine. Correct? That means it is neither for sale nor for long-term. Got it?
Yes, sir.
It is the purpose of to maintain SLR, statutory liquidity ratio. Now, suddenly, if the RBI has reduced that limit to 18%, that means now 2% is released to the market. Yes or no?
Yes, sir.
Yeah, that is what we classified as available for sale. That means at the time of investment, so I don't have the idea that whether it's a short term or long term. Got it?
Yes, sir. Yes, sir.
Yeah, same thing here, or yeah, same thing. Now here, look out. On this long term, suppose if it's a long term investment, so what is your intention? To receive
To earn
interest
return on
or
it.
dividend, correct? Shall I say this is written?
Yes, sir.
Correct? If it is a short term means, even though it's a short term, if the company declare the dividend, will you receive or not? Will you say, no, it is a short term, therefore you only keep it?
No,
Tell
no.
me. To
It is written also.
receive return, that is a dividend or interest, and also to sell. Correct?
Yes.
And also to sell investment. Correct? Yeah.
Yes, sir.
Last one, no info. Both. Correct?
Yeah.
Yeah, no info. So because I don't have the idea now.
Yes, sir.
No idea. Correct? Same thing here, my dear friends. Here, HTM, what we are, look out here, whatever dividend you are receiving, yeah. So the dividend, what we call it as the dividend, whatever interest or dividend you receive, that dividend, what we call it as, shall I say this is a cash flow? Can I tell this is cash flow?
Yes, sir.
Yeah. So since it is an instrument, this written, what we call it as contractual cash flow or not?
Yes, sir.
Understanding? So that means if you are holding the investment or holding the financial instrument to receive only contractual cash flow, that means as per, look out, if I have invested in a debentures, correct? It's a financial asset, but as per debentures, when in that debentures application itself, it has been agreed. Terms and conditions are agreed or not? Yeah. So in a prospectus itself, they will clearly mention. So we are going to declare the dividend. Going to pay the interest on so and so date, and we are going to redeem on so and so date. Everything was predetermined or not?
Yes, sir.
Yeah, if you are invested in investments or securities, whatever it might be, with an intention to receive only contractual cash flow, that means only return. That means you don't have the idea to sell such investments. Got it?
Yes, sir.
Yeah. So that investments are classified as a held to receive contractual cash flow. That's what technically here what we call it as. Technically, what we call it as hold to collect contractual cash flow. That means hold to collect contractual cash flow means it's a long term or not? Long term or held to maturity. Are you understanding slowly?
Yes, sir.
Friends, are you understanding?
Yes, sir.
Yeah. So that means it is a long term. Suppose if it is a long term financial instrument, then what you have to call? Held to collect
maturity, hold to
contractual
collect
cash
contractual
flow.
cash flow.
Correct? Next, suppose if it is a short term means we will going to collect cash flow and as well as we will sell the financial asset or not? Hold to collect cash flow, contractual cash flow, and to sell financial asset. Are you understanding? So this is what? Short term or held for sale. Got it? Yeah. So that available for sale category is what we call as other business model. So here it is both. Clear? Yeah. So business model means intention, or shall I say duration? Period of holding. Duration or period of holding. Yeah. Please interact. Period of holding. So this is what we call it as business model. So business model means intention or period of holding. So period of holding is of three model. So three categories. One is held to collect contractual cash flow. That means it is a long term. So we have invested only to collect contractual cash flow. Yeah. Second one, hold to collect contractual cash flow and to sell the financial asset. That means it is a short-term financial instruments or short-term financial asset. Third one, at the time of I purchase the investment, but I don't know whether it is I'm going to hold for long-term or short-term. If I get, maybe I have classified. Suppose if I thought let us keep on a long-term manner. Suppose if I get the good price, I can sell. So that means I'm not sure that whether I'm going to hold for long-term or short-term. So that time it is other business model. Got it?
Yes, sir.
Yeah. So any doubts relating to this?
No, sir.
No. So to classify the financial asset, on what basis we are going to classify? Two bases. Classification of financial asset will be done on two bases. Number one is business model test. Second one is a CCF test. Got it? So CCF business model test means it is an intention. That's a period of holding. Based on that, asset is going to classify. So based on that period means. So how many types of period we have here? Business model, 3 categories. Number 1,
Hold to collect
hold to
contractual
collect
cash flow.
contractual cash flow. Second,
Hold to collect contractual cash flow and to sell financial
and
asset.
to sell the financial asset. Third one, other business
Other business model.
Correct? So now this is A, business model is over. Now let us go to the B, contractual cash flow. Contractual cash flow. Contractual cash flow. So contractual cash flow means, my difference, it is solely of principal and interest. Interest on principal. Solely on principal and interest. That's what we call it as, in a short form, SPPI. Yeah, interest on principal, or interest on the principal. This is what we call. So now, sir, what actually cash flow test means? Cash flow test means, my dear friends, that is amount of return. Second one, date of return. Amount of return, or date of return, if both are known. Both are known, then it is called as CCF test is satisfied. CCF test is satisfied. Are you understanding? Yeah. Sir, what is CCF means? It is a contractual cash flow, my difference. That is principal plus interest, how you are going to pay. So that's what we call it as cash flow return. Yeah. Now here, when that return is going to pay and how much we are going to pay, both if it is known, predetermined, then it is called as CCF test is satisfied. Yeah. For example, debenture interest. So debenture or capital is known. So therefore, how much interest we are going to get, we can determine or not. Suppose if it's a 6% or 10%, 6% or 10% return, suppose if it is, so 10% is a per annum, means if you are paying 6 months, means for 6 months, that is a 5% on the debenture capital. So how much we are going to pay, we can assess this or not, we can find or not. Reference,
Yes,
are you
sir.
there or not?
We can find it.
Yeah, why others are not responding? Pramod? Okay. Yeah. So what happened?
Everyone seems to be mute.
Why?
We are here only, sir.
Okay.
Nobody was responding, means how I can determine? Yeah, Aarti?
We are understanding, sir.
Yes, sir.
Oh, so much of that is Pramod. Yeah, Aarti muted. Okay. So this chapter, my dear friends, unless you interact, really it will not be good. So now, so that's why, so AS13 and this, because suddenly if I say a contractual cash flow, means you will blink, what is actually it is, correct? Business model and all.
Yes, sir.
So it is nothing but, my dear friends, investment, that is a financial asset, I'm going to classify. So I'm going to classify based on criteria. On what criteria I'm going to classify? At how long you are holding this investment. Correct? So that means whether it's a short term, long term, or if you don't know any whether it's a long term or short term, it is classified as a balance sheet figure. Got it?
Yes, sir.
Yeah.
Yes,
So
Got it.
that nature, what we call it as business model. Business model means intention for holding. Got it? Yeah.
Yes, sir.
So that's what here we have technically we have said in American language, because Indian language, if I say it is a long term, short term, you will feel, array, what is the tough in this? Correct? Yeah. So technically, suppose if I say contractual, that is hold to collect contractual cash flow. That means now hold to collect contractual cash flow means one type. Doubt will come or not? Yeah. So
Basically, it is like intention, duration, and returns.
that's all. Correct? So intention and return. So that return means cash flow. That cash flow, suppose if you could determine the date and amount, certain when we are going to receive and how much we are going to receive. Both if you can determine, then CCF test is satisfied. Got it?
Yes, sir.
If date of return and amount of return, if you couldn't determine, then CCF test is failed. Got it?
Yes, sir.
Yeah. So any doubt? Any
No,
doubt
sir.
for anyone
No, sir.
relating
No,
to this?
sir.
Yeah. So what's the contractual
No,
cash
sir.
flow test means? It is a amount of return, date of
Date.
return.
And date of
Both if you can ascertain, then you can quantify. That is, if you can find, you can quantify certain, then you can say it as a CCF test is satisfied. Got it?
Yes, sir.
Yeah. So now business criteria. This is over. Business criteria is over. Now let us go to the measurement base. Are you understanding how we are progressing in syllabus?
Yes, sir.
Yes, sir.
Now measurement base. Measurement basis for recognizing financial asset. Correct. On what basis we have to recognize? If you come across in an asset, my dear friends, that's a PPE, you would have come across. Initially, it has to be measured at cost. Subsequently, cost or evaluation model, like that we said or not?
Yes, sir.
Yes, sir.
Correct. So like that,
Yes, sir.
here also business, that is a criteria on what basis we have to recognize. That's what we are going to discuss. So here financial assets, so it has to be recognized, my dear friends. Number one is what we call it as amortized cost. Amortized cost. What we call?
Amortized cost.
Array. So it is nothing but, my dear friends, again I will go for your investments valuation as per AS 13. As per AS 13, so as per AS 13, valuation of investments. Valuation of investments. So keep it. So if it is a long-term investments and short-term investment. Yeah. So how to value? Long-term investment has to be valued at cost. Short-term
Cost.
investments has to be valued at cost or
Fair value.
NRV, whichever is less.
Lower.
Correct?
Yes, sir.
Yes, sir.
Yeah. So this is what, my difference. This NRV here and after we call it as fair market price here and after what we use call it as fair values. Correct?
Yes, sir.
Keep in mind. So now here the cost, this cost, what we call it as amortized cost. Are you understanding?
Yes, sir.
Yeah. So this NRVs here what we call it as cost or fair value. Clear? Friends, are you understanding?
Yes, sir.
Yeah. This
Yes.
fair value, suppose if it is this fair value only, this fair value, suppose if you are not regular trading, it's a normal just once in a year or 6 months once you are trading this financial instrument. That time you no need to open separate account for the fluctuations. Yes or no?
Yes,
Correct?
sir.
So you can route through what? You can route through P&L itself. Yes or no?
Yes, sir.
Yeah, if it's a small, if it's a few transactions means you can route it in P&L itself. You don't need to open separate account for control purpose. Correct? Yeah, if it's a volume is high, if volume is high, you have to open one separate account to control this fair value changes. Correct?
Yes, sir.
Yes,
So
sir.
that time I have to keep in other account which is called as other comprehensive income. Are you understanding? This is have regular way of trading. So in a large scale, suppose if regularly if you are keep on trading, then better keep it in a one separate account. That is, don't route through P&L. Keep it in a separate account called regular way of trading. That is other comprehensive income. Are you understanding?
Yes, sir.
Yeah. So that's what here technically what we call it as, my dear friends. Second one, it is nothing but fair value. Fair value. Yeah. So fair value, in this we have the two options. Either I can route through P&L. It's a through P&L outside. Correct?
Yes, sir.
Yeah. So this is what we call it as if we route through. If we route through, so this fair value, I have the two options. One is through P&L or other comprehensive income. Correct? So this is what technically here we have written. Fair value through P&L. This is what we call it as FVTPL. Are you understanding? Fair value through P&L. Yeah. Third one, it is nothing but this, which we call it as fair value through other comprehensive other comprehensive income, which we call it as FVTOCI. What OCI?
FVTOCI.
What is expansion?
Fair value through other comprehensive income.
Yeah, looks easy now.
Yes, sir.
Yeah. So now, so how we are going to measure? It is nothing but cost or fair value here. Clear?
Okay.
Yeah, valuation of investment is done at cost or fair value, correct? So that cost here we call it as amortized cost. Name alone change. If I say only cost means you will not feel standard stuff, correct?
Correct.
That's why we change the name into amortized cost. Now you feel something different. Catchy point is there or not?
Yes.
It is nothing but amortized cost means amortized cost. Hereinafter cost means what?
Amortized cost.
Amortized cost. In a financial instrument, cost means amortized cost. Next, fair value. So fair values, it's like market price only, but that changes. If it is a few in number, then you can route through P&L. Suppose if your accounting policy is to route through P&L, small fluctuations are there, then it is called as fair value through P&L. Got it?
Yes, sir.
Yeah. Suppose if you are dealing with financial instruments in a regular way, regularly you are trading, so therefore there may be a fluctuations regularly. Therefore, why to disturb our normal business P&L? So that's why you keep that fluctuations in a separate account called other comprehensive income. Got it?
Yes, sir.
Yeah.
Yes.
So that time we call it. They call this as a fair value through other comprehensive income. Got it? Yeah.
Yes, sir.
So therefore, how many measurement bases are there for recognizing financial asset?
3.
Yeah, technically 2 only, but number purpose 3. Correct? It is nothing but cost and fair value. Clear?
Yes,
But
sir.
for the purpose of accounting, so we have classified into 3 types. It is nothing but at amortized cost, which is nothing but what? That is cost. Correct? Next is fair value. Fair value through P&L, fair value through other comprehensive income. Clear?
Yes, sir.
Yeah. Next, third category, what we require before we go for my accounting purpose measurement. So we have to classify now based on this two. We have to classify the financial asset or not? Yeah.
Yes.
So classification of financial asset. So financial asset has been classified, my dear friends. So financial asset means what, my dear friends? Financial asset. Financial asset.
Cash,
Yeah.
investment in
Cash.
equity shares of other
Yeah.
entity.
Yeah. For that. Look out. It is primary or derivative financial instrument in that 2 category. Correct?
Yes.
So in primary or derivative, it will give rise to 3 na. One is financial asset, financial liability, equity.
Financial liability.
Correct?
Equity.
So here we are in financial asset types. Got it? Yeah. This financial asset can be primary also, it can be derivative also. Possible?
Yes, sir. Yes, sir.
Are you clear? Slowly?
Yes, sir.
Yeah. So as well as this financial asset, this equity instrument means if equity instrument has the both character of financial asset as well as financial liability. Got it? Yeah. That means equity instrument means what, my friends? It will behave as same as equity shares.
Yes, sir.
Suppose if you have purchased the investment which behaves the equity shares of other company, it is like equity investment.
Yes, sir.
Equity instrument. Suppose if your company has the liability like equity instrument, it is called as financial liability, but which behaves equity instrument. Therefore, we classify it as a equity instrument. Got it?
Yes, sir.
Yeah. Looking this presentation clearly. Yeah. So that is a financial asset can be of 3 types. One is value. What is the primary financial instrument meaning?
The value can be derived initially.
Value can be derived. That is value of that instrument if it is known, or value of that asset if it is known, then it is called a primary. Correct?
Yes, sir.
Yeah. That primary financial asset, what we call it as debt. Primary financial asset, what we call it as? Primary financial asset, what we call it as what? Debt. So debt means value is known. Got it? Yeah. Second one is equity instrument. Equity instrument, that is nothing but equity. Third one, what we call it as a derivative. Are you understanding? Yeah. So that is a financial asset for which if the value is known, it is called as primary financial asset, primary financial instrument. For that, if it is underlying asset, if you want to receive the money or if it is asset to you, it is called as financial asset. Out of financial asset, what type? It is a debt financial instrument. Are you understanding? Number one, it is debt instrument. Debt instrument means what?
Primary
Value is
financial asset.
known. That is primary financial instrument asset. Are you understanding? Next, second one is equity instrument. Equity instrument. Third one is what? Derivative. Third one is derivative. Yeah. So derivative means here options, futures, etc. So that means, my dear friends, a debt instrument. So here value is known. That means, for example, receivables, loans, receivables, payables, this all are covered in a debt instrument. Got it? So friends, what and all will cover here? It is a receivables, debentures, yeah, debentures, etc. Debtors, etc. So these are all covered in a debt. So equity instrument means, suppose you have invested in other company equity shares, means it is a debt, it is a equity instrument or no? Yeah. Array, equity
Yes,
instrument.
sir.
So because since it is a, you have invested in other company equity share, means that equity shares are behaving as same as equity instrument. No.
Yes, sir.
That means your return is depends on their outcome, etc., etc. Correct?
Yes, sir.
Yeah. Next is derivative. Derivative means, so like features, forwards, etc. The price, the contract price cannot be determined on the face. It depends on the exercising date at exercising price for that underlying asset. Got it?
Yes, sir.
Yeah. So financial asset, here and after whatever we touch, these are the three character. One is debt instrument, equity instrument, and derivative instrument. These are the three categories will be there. Clear? So
Yes, sir.
final category is, my difference. Look out. So first is financial instrument. Types is primary, derivative. So that primary or derivative gives rise to either underlying, it may be financial asset, financial liability, or equity instrument. Got it? So first we have
Yes, sir.
understood, it is just a definitions we have understood. I repeat, definitions only we have understood. What is how the financial asset means, what is financial liability, and how equity instrument. Got it?
Yes, sir.
I have not classified
Yes,
as a
sir.
separate. This is separate. This is separate. This is separate. No, for the purpose of definition, I have classified three types. That means three character might be there. Got it? Now, in financial asset, so financial asset or financial liability, it is nothing but either primary or derivative or equity. These are the three categories will be there. Clear? In a financial liability also, same thing. Debt instrument, equity instrument, like derivative, same thing will be there. Same thing will be there. So equity instrument, it is a no classification. It's a character name. It is a character name is equity. Got it? It is like residuary. Now let us go for number 4. Category number 4 is measurement of financial asset. Measurement of what?
Financial.
Asset.
Recognition and measurement of asset. Recognition and measurement. So that is, this is initially how it has to be measured. Financial asset. So first, my dear friends, so what are the types of financial assets we have classified?
3 types.
3 types. Number 1, debt instrument, equity instrument,
Derivatives.
derivative instrument. So one on one, let us progress to analyze. How it has to be. Correct? So debt instrument, I said, so it is a receivables, payables, loans, etc. Correct? Yeah. First, let us go with category 1. That is called, we call it as debt instrument. Debt instrument. So it's nothing but primary financial asset. Got it? Yeah. So for debt instrument, my dear friends, so I said on what basis you are going to classify. Already we have classified. Already we have what? What are the criteria for classification of financial asset?
L2.
Criteria. We have two criteria. One is what? CCF and business model. Correct?
Yes, sir.
So
Yes,
therefore,
sir.
first test is, my friends, CCF test. What is that?
CCF test.
Test. Correct? Conditions of CCF test. If CCF test is satisfied, yeah, CCF test is fulfilled. That means it's a satisfied. So here, not fulfilled. Here, not fulfilled. Yeah. If it is fulfilled means if CCF test is ready, then I can go with business model test. That is, if you could able to ascertain when you are going to receive the return and how much you are going to receive the return, date of return, both are known, then CCF test is satisfied.
Yes, sir.
Once CCF test is satisfied, then I can proceed for the classification of financial asset, whether based on how long you are going to hold. Correct? So then we have to apply what test? Business model test. Business model test. Correct? If CCF test is not satisfied, then business model test cannot be applied, because if you know when and how much you are going to get, then only I can say how long you are holding. Got it?
Yes, sir.
Yeah. Now business model test. In a business model, how many types we have? Hold to
types.
Three
collect.
models, 3 types.
Hold to collect contractual cash flow.
Contractual cash flow.
Next,
Hold for sale.
Hold to collect
Hold for
contractual
sale.
cash flow and to sell financial asset.
and to sell financial asset. Third one.
Other business model.
So other business model. Other business model. Correct? So now let us go to, we are in measurement. We are in what?
Measurement.
Initially at recognition, if it is a financial asset means how we have to recognize, and measurement means value, at what value we have to measure. Got it?
Yes, sir.
Yeah. So if it is collect contractual cash flow, that means it's a long term or not? Right. This is
Yes.
what? Long term.
Long term.
This
Yes.
is a short
Yes,
term.
sir.
This is other. Correct? So long term investments has to be valued at, as per AS13, long term investments has to be valued at
Amortized cost.
Amortized
cost.
cost.
So here it is called as
Amortized cost.
amortized cost. Understanding slowly?
Yes.
Amortized cost. This is what? Measurement base. Measurement base. Are you understanding why we have classified already measurement based types? Clear?
Yes, sir.
Yeah. Next, it is a short term investment. That means it is held to collect contractual cash flows. Held to collect what? Contractual cash flow. And short term means it is intention to sell or not.
Yes, sir.
So therefore, since it is a regular way of trading, intention to sell means intention itself to sell in a near future. Yes or no?
Yes, sir.
So therefore, I have to keep this outside the P&L or not? If it is not repeated way means I can route through P&L. Yes or no?
Correct. Yes, sir.
So here, since it is the intention is to sell itself, means it is like you are in the business of buying and selling. Correct?
Yes,
So
sir.
therefore, FVT OCI, fair value through other comprehensive income. Are you understanding? Yeah. Next.
Yes.
So other business model is neither one nor two. Neither one nor two. That means this is one, this is two. Correct? So then it is called as other business model. Correct? Or FVTL option is selected. Then you have to route through FVTPL. Sir, what actually it means? That means it is neither first one, that is not a not hold for to receive contractual cash flow. If it is so, I would have recognized that cost. Yeah. If it is a second category, if it is a hold to collect contractual cash flow and to sell financial asset means I would have recognized FVT OCI. Yeah.
Yes, sir.
Yeah. Or even if it is hold to collect contractual cash flow for this, and instead of FVT OCI, if FVTPL is selected, then also FVTPL. Friends, are you understanding? Yeah, if it is not long term, not short term, then FVTPL. Got it? No classification, residuary. Yeah, or
Yes, sir.
it is a fair value contractual cash flow. That's it is like short term, but the accounting policy which I have selected for measurement basis route through P&L, not OCI. If it's a small case, I will route through P&L.
Yes, sir.
In that case, FVTPL. That means it is neither one nor two. If it is that case, it is FVTPL. Got it?
Yes, sir.
Next, last one. So if contractual, if the CCF test is not satisfied, then balancing figure FVTPL only. FVTPL. Are you understanding slowly? Slowly, are you understanding? Yeah. So debt
Yes, sir.
instrument, how it has to be recognized? So first, for the purpose of measurement, before I have to apply criteria for classification, that is first is CCF test we have to apply. If CCF test is satisfied, not satisfied. If it is satisfied, then business model test we have to apply. Got it? In a business
Yes,
model,
sir.
three types are there. So if it is long term, there is a whole to collect contractual cash flow, then you have to recognize that you have to measure that financial instrument initially at cost. Got it? That's what amortized cost. If it is hold to collect contractual cash flow and to sell the financial asset, then it is like short term. You have to recognize that FET OCI, fair value through other comprehensive income, because intention here itself to regularly trade. Yes or no?
Yes, sir.
So here itself, suppose if you decide no, I don't want FET OCI, then I will route through FETPL. That's what in a third category. Second one I have written if FETPL option is selected. Got it? Yeah, instead of
Yes, sir.
FET OCI, if voluntarily the company has selected FETPL, then FETPL. Got it? If nothing is said, then regularly if you are dealing, then FET OCI is better. Got?
Yes, sir.
Yeah. So other third model, if it is not long term, not short term, then it's a balance figure FETPL. If a CCF test is not satisfied, then also FETPL. Got it? Slowly. Yeah. Now let us go to the next. Second one is equity instrument. B. Equity instrument. Equity instrument. So equity instrument means, my dear friends, equity instrument means it is as same as like equity shares.
Yes, sir.
Yeah. So now, do you know whether it's equity shares or preference shares which satisfies equity, whatever it might be? So those shares, when you are going to receive the dividend, do you know? Can you assess? Sorry. Suppose if you have an investment in equity shares, can you say when you are going to receive the dividend?
Sir,
No,
we
sir.
can't say.
No, correct? Because when the company earns the profit and declares the dividend, then only you will get. Correct?
Yes, sir.
Yeah. So third one, then when you don't know at least how much
So we
you are
don't
going to
know,
get the
sir.
dividend. Can you assess?
No, no.
No.
No, we
Even if you have made the investment in preference shares, 9% dividend you know, but when they are going to pay, that you don't know. Because if equity dividend has paid, then only preference dividend will be paid. Yes or no?
Yes, sir.
That is contingent. So therefore, so can I say here for equity instrument, CCF test will not apply. Correct?
Yes, sir.
Yeah. Why? Reason?
Because amount
Date
of return.
dividend. So here return means what? CCF. CCF means here dividend. On
Yes.
equity instrument, what is the return? Dividend only, no?
dividend.
Yeah. So
Dividend.
therefore, date of dividend and amount. Amount is uncertain. Yes or no?
Yes, sir.
Uncertain. In case of debt instrument, if it is a loan, you know that when you have to pay the interest and how much you have to pay the interest. If you have investment in a debentures, it's a debt instrument because CCF test is satisfied because you know how much interest you are going to receive and when you are going to receive. Got it? Yeah. So therefore here CCF test will not apply. So thou only business model test only we have to apply or not?
Yes, sir.
So that business model test only. So here what we call it as. So business model means what? Intention for holding a.
Yes, sir.
Yes, sir.
Yeah. That's what here what we call it as. Is it held for trading? It is nothing but business model. Is it held for trading? Correct? If your answer is yes or no. Yes, no. Answer is yes or no. Correct? If it is held for trading, my dear friends, it's an equity instrument. I repeat, if it is an equity instrument, if it is held for trading, then you have to recognize at FET, FETPL. FETPL. So because there is a change, because here it is a change is different. So look out. If it is a debt instrument, if it is held for trading, you would have recognized to FETOCI.
Yes, sir.
Correct? But equity instrument, if you held for trading, you have to recognize that FETPL.
PL.
Yeah. Now, if it is no, if it is it is not held for trading, then it is a long term, like not held for trading. Correct? If it is not held for trading, means it is long term. Yeah. In that case, so first option, if FETOCI, if FETOCI option is selected, then you have to recognize that FETOCI. Yeah. Yeah. So if not, if FETOCI is FEI option is not selected, then balancing figure you have only option is FETPL. FETPL.
Can they select FTOCI option here, sir?
Sorry.
Can they select FTOCI option here because it is not traded?
Yes.
Frequency is less.
Yes.
Oh, okay.
Yeah. Yeah. So here amortized cost concept will not apply. Got it? Amortized cost concept will not apply. Next, lastly, let us go for third category, which is C. C, it is derivatives. Derivatives, correct? No classification for derivative. So it is only basis on recognize on FETPL. That's it. Derivatives, so we don't have the option. Derivatives, we don't have the classification like long term, short term, and all. So derivatives means what? Value cannot be determined on the date of contract. Yeah. So that changes whatever you have to recognize through P and L only. Got it? Friends, are you understanding slowly?
Yes, sir.
Yeah. So this is what classification of financial recognition of financial asset. So then we go for financial liability. Financial liability. So financial liability, my dear friends, we don't have much. So financial liability measurement. So that is measurement of financial liability. That's it. So we don't have financial liability. So only measurement. We don't have like a classification of financial liability, this and all. Because liability, whatever is there, anything we have to pay. Yes or no? Correct? So therefore, financial liability we have to recognize only on. So measure on either FETL or at amortized cost. Amortized cost. No concept of array. It is a liability is there. So can you deal with? Can you trade with liabilities?
No,
Array
sir.
debentures someone has invested. Can you trade with liabilities?
No, sir.
No. Therefore, here FETOCI concept is ruled out. Are you understanding?
Yes, sir.
No FETOCI because I can't trade that. I can't trade that and all. So therefore, suppose if it's a small fair value changes are there, I can route through P&L or carry at cost. That is better. Got it?
Yes, sir.
Debentures or shares, whatever normally it is there, either carry at cost, amortized cost, or compare with market. That changes you have to. If it's a normal, if it's a liabilities, normal fair value. If changes are there, you have to route through P&L. Got it? Yeah.
Yes, sir.
So this is what financial asset, financial liabilities. So now derivatives means what? That let us discuss after the break. Are you understanding slowly, my dear friends?
Yes, sir.
Yes, sir.
Yeah.
Yes, sir.